Thank you very much, John. So this year, one of the biggest, if not the biggest, issue in the FX industry has been Bitcoin, Ethereum, ICOs, everything blockchain related. Everybody's talking about it. You know, it's the hottest buzz in the industry. But we wanted to understand from a retail perspective, you know, what does it really mean to face this challenge? So we got a diverse panel of experts right now to talk about this issue. So now, if you please, starting with Rosario, present yourself.
Sure. My name is Rosario Ingargiola. I'm the founder and CEO of a company called OTCXN Network. We're fundamentally a blockchain company, and on top of a proprietary custom blockchain fabric, we've built a peer-to-peer trading network that is initially starting in the spot FX market and cryptocurrency markets.
My name is Carolina May. I'm the business developer for NewsBTC. We're an information portal on cryptocurrency. We cover everything from blockchain technology, ICOs, Bitcoin, Ethereum, and all the altcoins. So that's it.
Hi, my name is Simon Grunfeld. I'm the executive director for Ibanez. And Ibanez sets up entities to essentially launch their own crypto exchange, their own ICOs, and anything revolving around blockchain technologies.
Hi, my name is Matt Miller. I'm CEO and founder of a company called Shift Forex. We recently actually dropped the Forex from our name and going by Shift now because we're focusing also on helping people start their own crypto exchange. Just recently launched our front-end trading platform and back office and white label service essentially to offer a crypto-specific trading platform. So, go ahead.
Hi, my name is Alex Neckerton, and I'm the managing director of NextStream. We're a consulting and introducing broker company in the FX and now definitely crypto space. We help IBs, brokers find liquidity in FX, CFDs, and definitely a lot of cryptocurrencies now. We also work with some companies that are getting into, purchasing Bitcoins and even starting their own exchanges. So definitely made a major pivot in the crypto direction.
Great. So like we said, a very diverse panel from liquidity to news to everything in between. First question that I want to get into is what's the biggest misconception right now in the industry about cryptocurrencies, the way you see it from each one from his own vantage point? If you want to start with that.
Yeah, I mean, I guess I think one of the biggest things that we see is actually the people fail to sort of disconnect the blockchain technology piece from the actual cryptocurrency. And I think it's very important to make that distinction. And then there's also a lot of confusion about the different tokens that are spoken of. So we have a tokenization service that we give to custodial banks that lets them tokenize cash that's in a client account so that it can be used as collateral on our network. That kind of a token is not a cryptocurrency. There's no native cryptocurrency in our platform. And then all the talk about ICOs, a lot of people don't realize that there's two kinds of token there that are not necessarily cryptocurrency. Utility tokens that have some sort of consumptive value or use in the network. And then there's really tokens that are ultimately have been or will be deemed to be securities. So there's some danger there as well. So it's important to understand all these distinctions.
Well, I think that people are treating cryptocurrency as a currency. We are used to USD, Euro, and other currencies. And everything that is included there is a new way of looking at finance. So yes, it can be traded, but the blockchain technology is something that can be used for many, many other areas. And it's not just about the currency, it's a new way of doing finances.
I think from my perspective, I look at it two ways, because blockchain, which is the fundamental reason why cryptos exist, which is essentially a means to transfer value, trusted value, from one entity to another without any central governing body, is a little confusing to people. They're still trying to get their heads wrapped around how is it that you can do what you do? Or how is it that I can provide my clients with this kind of service without having any kind of interference? So that's usually a challenge. I also find that now in the market, when it comes to ICOs, as we just mentioned, there's a little bit of cloud hovering over the marketplace because there's many different utility that you find with an ICO. It could be in the form of a Kickstarter campaign where you're trying to raise money for a platform. It could be where there's actual utility using your token. So that definition has to be a little more clear sometimes, to some degree, by the body actually releasing the token.
Matt, you actually talked to the brokers as your clients, and I wanted to know, or to refine this question. Not a while back, mostly Bitcoin appeared in the news in a cybercrime context. Do you think that still lingers from what you see?
Yeah, that's a good question, and I think a relevant thing to talk about, especially at what is traditionally an FX crowd, and people who are very used to the kind of industry that we've been in for a number of years. And I have to kind of take myself back. We've spent the last couple of years kind of preparing to enter the crypto space, and in the last month and a half and 2 months, we've really obviously kind of done our own due diligence on the industry, both on the blockchain side and on the cryptocurrency side. And I think, if you just take a quick look across the news, you will find lots of things, like you say, about people using Bitcoin and these other currencies for illicit means. And I think there's obviously, a little bit of a problem with that. I'm sure still going on today. But I think it's changing very, very quickly. And as I've delved further into not just the blockchain, but the crypto space, what I'm finding, especially, I live and we run our company mostly from New York, is that, there's a lot of really smart people and a lot of very sophisticated players and institutional and long-standing people from very established industries that are coming into this space to legitimize it. And it's happening now. It's happening a lot quicker than I think people maybe here realize. And that goes for, the crypto side, not just the blockchain. And that was probably the biggest surprise to me, because I had the same kind of, 10,000-foot view not that long ago, that this was kind of maybe just a fad or another binary options type situation. And I really don't think that's the case. I believe in blockchain and I believe in cryptocurrencies as a concept for the very long term. I don't know what Bitcoin's going to do tomorrow, next week, or 6 months from now, but what I know is that cryptocurrencies solve a lot of real world problems, and I think that we're going to see that application across not just FX and CFDs and alternative investing. You're going to see it everywhere. That's.
And Alex, do you have an issue that you see people are not understanding right now about the issue?
Yeah, my experience definitely mostly on the liquidity side. So for broker, just to clear it up, I mean, sure a lot of you guys here are in the brokerage space, and them not being clear. Some want to go direct to exchanges and think it's better than going to another broker that's already aggregating a bunch of exchanges and selling an aggregated feed, or going to like a market maker from the liquidity side that's basically like a prop shop that's acting as an LP. So there's a lot of clarity that we get, and we help brokers with that, because going to the exchanges direct has its pluses, but it also has its minuses. Like you're definitely going directly to a source, so you're cutting out certain middlemen, but at the same time, their support and writing into their API is challenging. Their spreads will be sometimes tighter, but the market depth becomes an issue. So from the liquidity side, you got to balance it out. Whereas if you go into, and it depends on your type of clients too, so if you go into an exchange or an STP LP or a market maker LP, those are 3 completely different things that you got to basically balance out depending on your clients and how to handle it. And that's definitely something that, we help brokers and companies clear up. And I think there is a misconception there,
Yeah. One more thing I wanted to add about misconceptions. We primarily cater to actually non-FX related clients. So up until this point, we really haven't had exposure in the FX marketplace. And I think one of the biggest misconceptions that you see here and not in the markets that I deal with is an issue around spreads, because the markets I deal with they're not speculators. They're buying Bitcoin as a deliverable, right? So they're buying Bitcoin, Ether, Dash, Ripple, whatever it is. They're not really concerned about spreads. Spreads is not a concern to them. If anything, it's the commissions that the exchanges, my clients, have to pay either to me or that their clients have to pay them. Those are the concerns. It's not really a question of bid ask, etc. Because we're talking about a one-to-one. We're talking about an unleveraged product. This is not a concern to people if it's a $7 spread, $10 spread. They're looking at Bitcoin, swings of $200, $300 daily. Okay, so $5, $6, anyway, it really doesn't make or break a deal. So that's just from my perspective.
If I may jump in, I see that too with our non-broker clients. So we got companies coming to us. They want to accumulate Bitcoin. They don't really care about spread or commission. They're reselling it to companies at an even bigger markup. Like we just had one guy that charges like 2 or 3%, not basis points, 2 or 3% on top just to sell Bitcoin.
Yeah, that's definitely very different than what we're used to in FX right now. Next question I want to get to before we'll follow up on liquidity is about blockchain technology, right? Beyond just the currencies, where do we see it affecting the FX industry? Rosario, you want to touch on this?
Yeah, sure. I think it's going to have profound effects on the industry. I'm not sure that most people are, unless they're familiar with all of the initiatives going on inside some of the banks and some of the vendors that are working with these banks to produce new next generation solutions for the FX space. If you're not familiar with those projects, you're probably not thinking that it's going to have a big impact on the market, but I think it will. And there's a lot of projects that are going on that are targeting very discrete parts of the workflow, like maybe the post-trade processing and trying to bring efficiencies and reduce costs. But I think that's kind of the low-hanging fruit. I think cost reduction is great, increasing efficiency is great, but I think there's bigger changes afoot, and we're trying to bring some of those and spearhead some of those ourselves, and using blockchain for what I think it's really meant for, which is crossing trust boundaries, making it possible for people to face each other without counterparty risk and without where we can step in and be a technology provider. As opposed to somebody that actually has to be a trusted counterparty ourselves or hold collateral. So there's a lot of very interesting initiatives going on, and we're fortunate to be part of one.
Yeah, if I can just add to that, they're all very good points. And I think very specifically for me as someone who's kind of in the operational side of my own business, and I tend to hear and speak to a lot of the different brokers that we work with out there and their kind of operational needs. And one of the things that I see is, if you think about, if everyone's familiar with Ether and a smart contract, and you think about the concept of onboarding a customer almost instantly and doing KYC and signing customer agreements and all of those things that you have to do to satisfy regulators that are very challenging, very time consuming, and really almost like a bit of a block to onboarding a customer, that you kind of have to jump through some hoops, right? And if you can do that instantly, all in one go with one product, I think that's a very interesting and disruptive product to some of the different payment solutions that are out there now. And that's a big problem in FX is, how do I get my customers to onboard? How do I handle all my KYC, my AML, and all these things, right? And how do I get customers at the same time to over those hurdles? And it solves a lot of those problems. There's a lot of people trying to figure out a solution so that they can overcome that. And as a broker, I would be excited for that because just so much quicker and easier and less resource intensive to do it that way. Obviously, we're not there yet today, but that I think that is in the future. So.
Well, one of the big concerns with the Forex industry has always been transparency, especially on the trader side. And that's what blockchain brings in as well, brings much more transparency in all transactions where everyone can be following every transaction that is being done, and also removing the middleman, which reduces the cost a lot. So that's one of the big things that blockchain technology will bring into the industry.
I want to give a specific example around payments, etc. There's a coin right now being developed that complies with Sharia law. So imagine, if you will, that you can accept Sharia accounts with a token, a smart contract, and a way for the broker, the entity, whoever's taking the account, to know that by using this coin, you're in compliance. Just as one example.
Interesting.
Yeah, I mean, I think, sorry, just to jump in, Avi, I mean, I think one of the most overlooked but most powerful features of what you would consider to be sort of a true blockchain technology stack is actually that cryptographic signing, that non-repudiation mechanism, which gives you undeniability of a transaction. So for us, it's really the crux of all this is sort of having an end-to-end provable system where you can literally prove how a match was made, what market data triggered a stop, all of these sorts of things, in addition to everything on the administrative side, changes of credit controls, things like that, where different actors in the system can actually sign and have undeniability around those actions that they take within a system.
Next question I want to get to is the nature of the end users that we're seeing. In FX, we're used to more short-time speculators, I would say. Following up on what Alex says, more buyers, right? So tell me, what demographics do you see? Anyone that's familiar?
Well, this is forex traders are only part of the audience for crypto, but if you see all people interested in technology are into crypto. People that follow specific political ideas like libertarians are into crypto because it's a new way of looking at finance. It's a way also outside of banks to dealing with this digital money. So there's like when Coinbase opened, like they got almost 100,000 accounts open in one day, and I don't think you can see one broker that had that happen. So it's a much bigger population that's into crypto than just forex traders.
If I could jump in, I actually wrote an article for Magnates about that. It's just a way, way bigger pool. Like we had people approach us, you know, one was like a security type of company, and they needed to pay for certain services in bitcoins, like that in that space. Companies that resell, like I mentioned, bitcoins, they buy them on the exchanges and resell them out, and they need liquidity. Then you got your brokers with your, you know, traditional traders. Among broker wise, it's interesting. There's definitely a long bias. Like more people go long than short, as you can see, because it's growing. But there are obviously corrections in the space. And one other area that you can't forget about is miners. So that's a whole other industry. I mean, they get in, they want to hedge positions, for example. So if miners are mining, say they're mining Ethereum or now Ethereum is becoming a little tougher. So say it's Zcash, for example, they're going to want to go short that to hedge because their exposure would be whatever their mining's value to drop. So you get that whole play, and we've been approached by guys like that as well. So there's a whole, yeah, it's much more vast. It's like Forex is like a little lake, and cryptos is like an ocean. You know what I mean in terms of client base.
Yeah, I think you know, on the CEO panel earlier, I think it was Swanson that says 80% of their book was long. And I thought that was a very interesting statistic, and I think supports mostly what people are saying here. But one interesting takeaway for me that too, 20% of your book's still a sizable sizable chunk. It's not everybody, and I've actually been seeing we've kind of dug into the weeds a little bit. When you look at a very high level, obviously the majority can be long, but when you kind of dig into and you say what's the account size, and if a broker's offering a little more leverage or a little less leverage, then the buy and hold at 1-to-1 is an obvious thing that you kind of have to do in order to get the return that you're looking for if the leverage isn't available. But if you have more leverage and you do some of these things, then I do think very, very soon you're going to start to see people who do go both directions a lot more frequently than they are now, because you're starting to hear people talk about leverage and these concepts that are just starting really in crypto. And I think that's interesting. And there's a lot more trading that goes on mobile phones as well. And I think if you dig into those types of traders, same thing about spreads, etc. Some of the things that we would typically talk about with an FX account. But some of the brokers that we work with, they do most of their clients are over mobile, and they're actually seeing mostly that they do both. You know, it just really depends on who you are, the jurisdiction, the account size, and the leverage offered, I think. So there's also important factors, not to just caught up and say all crypto traders go long, because I kind of disagree with that blanket statement, even though there is absolutely you know, a lot of truth to it.
Yeah, I would say even if that is true, it's an extremely short-term phenomenon that's a function of just how immature the market is. Both, I mean, if you just look at the exchanges, I mean, there are no other exchanges that actually hold client assets, right? So they're holding client assets because they have no choice, because there's no prime brokerage. You know, one of the things that we're building from a technology point of view that we have the capability of doing is cross-exchange clearing and settlement. Doing that, coupling that with sort of true institutional grade exchange technology, the whole stack, lit pool, dark pool, execution algos, specialized order types that cater to the algorithmic market makers. You know, those algorithmic market makers are going to come in, and they're going to need speculators on the other side, and we're going to figure out how to deliver all of this downstream to brokers, where they have this huge pool of ready, willing, and able speculators to go both long and short, and it's just going to be the market maturing. It's definitely going to happen.
Okay, sorry. I'll talk about one of the things you just mentioned about mining, but before we do that, retail arbitrage. So from our perspective, we're seeing a growth in retail arbitrage, buying on one exchange, selling on another. And they're doing it very successfully. It's a weight game, okay? We've deployed a number of exchanges already where the intent of the organization that requested the exchange is to do exactly that. It's to buy and sell based on arbitrage opportunities. So I think that's something that is probably void from retail FX, if you ask me. To just touch base on the mining, mining is becoming extremely innovative. Extremely innovative. Think about it. You have a rig, you have an entire data center devoted to mining a smart contract or whatever it is, Bitcoin, Ether, Dash, whatever. These days, their biggest concern and their biggest hurdle is, how do I power it? How do I make it effective? Okay, and then how do I actually manage what I'm mining? A lot of the rigs these days, they're switching between one coin to another depending on the time of day, depending on how much it's costing them per kilowatt. That's how innovative these guys are getting to. Okay.
I just want to jump in, and I agree with Matt's point over here quite a bit in terms of the short. So, interesting thing is we went to the, I don't know if you guys remember this, the Old School Traders Expo. I mean, probably people here haven't gone in years and years. Probably gone like 5 or 6 years ago.
The New York one?
The Vegas one, unfortunately. But
what happens in Vegas, Alex?
These are the guys that basically a lot of the people there sell info products. So meaning, what's an info product? Like, I don't know if you're like Agora Financial, right? They sell like newsletters or signal services, courses, EAs. Like Forex had the Fab Turbo and whatnot. And, you know, those guys are really good marketers. They get a ton of leads, and they used to do this with Forex, and it kind of died down. It became way too competitive. I think the Forex traders realized that a lot of those info products don't really work that fantastically. What we found out at this expo and some of the events there is that they're selling the daylights out of anything that's crypto, that has the word crypto in it. So like all those products that were popular for Forex are going to be popular for cryptos. And you guys better believe that those say to go long and short. And the amount of retail leads. And to be honest with you, before this event, they didn't even know that a CFD product was available. They were just telling them to trade physicals. You know, we've been lucky enough to get some good connections out of that event. But yeah, I mean, we looked at a lot of that product, and it's technical based and all this stuff that you used to see in Forex. There's automated trading systems and newsletters. So they're going to add, you know, maybe on the physical side as well, but definitely on the CFD side, they're going to add a lot of like more of the traditional traders that are going long and short type of volume.
Yeah, there's actually a ton of products coming online. I mean, there's folks in the room here from CME that are launching products. There's CBOE. We're talking with some folks about clearing and settling their Bitcoin NDFs. So there'll be a lot of instruments to hedge all this other trading activity. It's definitely like I said, it's just a matter of time as the market matures. It's just a cycle.
Yeah, I think we were at a very mature market with forex, and then crypto is just new. So the path to grow is enormous there.
Definitely. So, the question I get asked the most, these days is, how do I add liquidity? Where do I find a trustable, source, somebody that can supply me with liquidity that won't disappear when times get tough. So, you all touched upon it, but if you want to, drill down a bit more, how do you find a good liquidity provider?
Guess I'll jump in on this
The
one.
liquidity guy,
Liquidity guy. I'm on the liquidity panel right after this. It really depends on your client base, and I think I have an article in Magnates about that. But I mean, primarily you have market makers, like kind of prop firms. You have brokers, and you can go to the exchanges. But then you could drill down even further. So, for example, if your clients are pretty retail, you can go to a broker that can, provide to either a market making broker or a market making prop shop that they can work with you on credit. They can take margin. If you're really big, they can even post margin with you, and they can do STP or rev share deals, traditional stuff like they would with a CFD. I mean, it's basically as a CFD, and they can provide it on leverage. There's also STP. So if you have clients that are maybe more of those, a little more sophisticated, that are more ECN, STP type of clients, you can go to one of those players and, do an STP standard type of deal. I mean, it's very, very similar to Forex. And, these firms have FCA registrations and ASIC and really, really traditional. Some people do go to exchanges, but, you're getting a little bit better of a spread. You're getting a little bit less. You're getting, in some cases, you're getting a lot less depth of book, at the top of book, and they got those scenarios as well. I mean, so there's pretty traditional. I saw like maybe out there like 3 or 4 shops that are selling their liquidity, and we work with about 5 shops that have been doing it for a while. They were kind of a little bit ahead of the game. So it really depends on your client book. I think another interesting thing, which we can talk about later, is getting your clients interested. That's what I'm seeing from a lot of brokers. You have FX clients, you offer, just adding BTC USD is going to get you volume, but everybody's hot over crypto. So how do you get those guys to actually trade them? That's something else that you got to think about as well.
Yeah, and I think what a lot of people don't realize is that all the usual suspects on the non-bank market making side in FX are either already heavily involved in making on the crypto side or about to be. So we see that with some of our clients that we're talking with. But liquidity is a problem. I mean, we probably remember the Ethereum flash crash. I mean, that was just a $12.5 million order that somebody put on GDAX that crashed at 96%. The price from $300 down to like $13 or something like that. I mean, that gives you an idea of sort of what the liquidity landscape looks like on an individual exchange. So we think the future, what everybody wants to see, obviously, particularly if you're a big market maker, is some consolidation, an ECN that can bring all that liquidity across all those exchanges and sort of organize it in one place with some proper institutional tools to be able to access that liquidity. But that requires, being able to do the clearing and settlement. And I think solutions like the one that we're putting together is good because it's going to also minimize that exposure that you have to have currently. If you want to trade on all those exchanges, you got to actually put assets with each and every one of them, which means you're individually, they're your counterparty risk on the other side, effectively, in terms of being a going concern or hacks and things of that nature.
On the CEO panel, Tom Higgins said that he expects like 100 small exchanges to go bankrupt next year, and the big future exchanges to actually buy up the big crypto exchanges and try to consolidate, bigger pools of liquidity. So that's one perspective on it. Anyone else wants to comment on liquidity challenges right now?
Yeah, I think the one these guys touched upon most of the trading aspect of it, and I think that's certainly important. And you know, one of the things to think about is, you know, a trusted partner with whom you're going to work. And I think in FX we're so used to, well, are you FCA regulated, CISEC regulated, ASIC regulated? No, if you have one of those three, then my money's safe. And there's just this kind of assumption that that's true. And I think with crypto it's a little different, because if you paper up with a FCA regulated firm and they hold your money, most likely if you're established as a professional institutional relationship, you're not qualified as a retail investor, and so your money's not as protected as you think it is. And also, if you're interfacing in terms of crypto, that's not a regulated activity officially. So, you know, how all that shakes out in terms of the actual security of your money, I'm not really sure. But, you know, don't just assume that because someone has a license that that they have a product that's going to meet your needs. Really drill down into who the people are and how well they know this space, because it's not the same as FX. And I think that that's the underlying discussion that's here. It's a very different industry. So if you think you know FX and that you're just going to come into crypto, take some liquidity, and they have an FCA and it's all going to be fine, I don't think that's the way to approach it. Really do your due diligence, really learn what this industry is about, and then really know the people that are kind of behind the liquidity itself.
I think one of the things that may not be really known to retail is that there are a number of very early adopters to Bitcoin that were a lot smarter than myself, who decided to buy it when it was at $1 or $2, and who are sitting on thousands and thousands of coin. And with that inventory, they're actually able to make markets themselves and to become their own liquidity provider, simply for the fact that you have an asset that went from $1 to now it's 7, 8. Who knows what it's today? I got to check it, right? But it's fluctuating at 5 to 10% daily. Go figure. But this is something that, again, the early adopters have managed to do, and they are effectively themselves now becoming liquidity providers. Other than the fact that I think we all kind of get the idea of, yeah, let's cross-connect, let's build bridges, let's connect with exchanges and, you know, offset and all that stuff. But one of the things that's key and different in this market in cryptos versus spot is that you can actually have players that were just smart enough 6, 7 years ago to invest $1,000 and buy 1,000 coin, and now they are effectively their own liquidity provider.
If I can add to that, actually, one thing you could do with crypto liquidity, and I think this would be interesting for Forex brokers, there's certain LPs that can work a situation where clients can take physical delivery, or you could do like a start your own exchange type of service and let your clients, because that book crosses over. I mean, our Uber driver, when we flew into Heathrow, driving us to the hotel, he overheard us and started talking about crypto. So like everybody wants to buy them now, you know? And I think you got crossing that offer to your clients to actually offer them taking the physical delivery. I think there's a money-making opportunity for brokers in that space. And they could do it with certain LPs or start your own exchange service that, you know, someone like Matt can talk.
Thanks for the plug there. Appreciate that.
I expect one back.
Okay, so I can see on the app we already have a question from the audience. If where's John? You want to get a microphone there, or should I?
Hello.
What
can
do you
I
mean when
ask
you
a
say
quick
options? What do you mean? Like what options of liquidity, technology, maybe a... Well, if you, I mean, there's obviously services like mine or others out there that have a package for if you want to start your own crypto exchange. It's probably a soup to nuts kind of white label service that, you know, you get a front end trading platform geared for crypto trading. You can also obviously do the CFD liquidity straight into MT4 or MT5, and those are the more or less the options that are out there right now to kind of enter the space if you're not doing it now.
We to touch base, we actually do an exchange out of the box. Okay, so start your own exchange. And it comes with the full back office, with KYC, AML, basically the soup. So somebody who's looking at any entity that's looking to start their own exchange, it's actually very turnkey at this point. I think that really the challenge isn't around the technology, it's really around the fiduciary side. The challenge is really around how do you structure yourself in a way that you can take client funds, non-crypto funds, okay, so fiat, just like any other broker would. Obviously there's solutions, you can work with custodians, you can find a way around it, but that's really the biggest problem that I'm seeing with my customers.
We also had a question here. If you want to get the microphone to this side. Right here. Do you want to ask it, or do you want me to read it off the app? Okay, I'll just read it off the app. Given that the CME are launching a Bitcoin future contract in December, what potential is there for a futures contract to drive the spot market?
High leverage.
I think also they're going to use, I think the CME already sells the data, so that the price feed, because it's different from exchange to exchange. You know, that's where the arbitrage opportunities that Simon was talking about exist. So I think you're going to see maybe a lot of the brokers, the CFD providers, use that data from the CME as the price feed.
Yeah, I mean, I think it remains to be seen, but if you think about some other digital assets, like if you look at like Royal Mint Gold, that's a token that's issued by the UK Royal Mint, that's backed by physical gold in a vault. You know, those tokens trade at a premium to the spot gold price for various reasons. So I think it'll be interesting to see actually how that shakes out. But you could see it potentially, for various reasons, maybe trading at a premium.
Okay, any more questions from the audience? Can you get the mic here?
Hi, yeah, a quick question. Do you guys prefer on-chain or off-chain scaling?
What was the question?
Sorry?
On-chain or off-chain scaling? Which one do you prefer?
On-chain or off-chain?
Scaling. So Bitcoin versus Bitcoin Cash.
Oh, Bitcoin. Well, I guess the preference is really left to the user, to the end trader. Okay, you have one instrument that's between 6,000 to 7,000, and you have another one that's just breaking through 1,000, approaching 2,000 right now. Very rarely have I seen any instances where an individual prefers a type of coin other than an ICO, which is a separate topic. But if we're talking about just like the majors for right now, nobody really has a preference based on the underlying technology, the hash rate, nothing like that. That's really more of an interest to the miners. It's more of an interest to those institutions that care about how much it's going to cost them to maintain that underlying coin. My customers really don't. It's not something that concerns them. What does concern them is around ICOs. Which ICOs they want to allow their clients to trade, which tokens they want to allow them to. If the exchange themselves are the ones offering the token, which is what I'm seeing now is a huge trend. People are starting their own exchange to actually launch their token, to do an ICO on their own platform. So yeah, there would be a little bit of favoritism there.
I think there's room for all the coins to be out there, and also because with the ICOs, depending on the market you want to get in, it's like a way to invest in different areas. So I don't think there's a preference or one that will survive over the others. There will be room for tons of different cryptocurrencies.
Okay, so we started 5 minutes late, so we have another time for one last question. So following up on what Simon said, would you recommend somebody, either an FX broker that's now entering the space, or somebody that's want to set up their own startup exchange in the field? Would you recommend them to add ICO tokens, or should they just focus on the major cryptocurrencies?
It boils down to one question: what problem does their ICO solve? Okay, so where's the utility? Where's the value that your token is going to give me that I can't get from somebody else? Or maybe it's a competing product, and that's fine. But what is it that your token is so fantastic about that it's solving a problem that I just need to have solved? a lot of the influx of interest that I'm seeing right now is around that. They want to launch a token. They want an exchange out of the box to do it under, so it makes sense to combine the two. Many of them have really no idea how to create a token the right way. They don't understand how to audit their own contracts. The space itself isn't very clear to them. But, you know, coming back to whether I recommend it, again, if you are bringing value to a person, to a client, that your token helps solve, whether it be remittance, whether it be security, whether it be some other form of utility and value, yes, absolutely.
I think there's a bigger issue, and there's a regulatory issue. So many of these tokens are going to be deemed to be securities under the whatever jurisdiction they're trading in. So, for example, if you're in the U.S. and you're going to list an ICO token, obviously there's no retail brokers in the U.S. anymore, practically, but the point still stands. That, you know, you'd have to be basically a FINRA-regulated broker-dealer in order to trade most ICO tokens. So it's not the same thing as a cryptocurrency. I would say get good legal.
I think it's a little bit of a differentiation play, like for a broker. I mean, you guys probably know that there's a lot of, I don't want to say copying, but there's a lot of like trends. Like we were in Cyprus and there wasn't that much, you know, was it in May? There wasn't that much talk about cryptos. Now it's like everybody's talking about cryptos. So all the brokers are going to have and more brokers are offering it now. So it's all going to be very similar. You know, you got the majors, Bitcoin, Dash, Ethereum. What you're going to see coming up a lot is like indexes. We're already talking to people who are doing Bitcoin indexes. So that takes away single instrument risk, you know. So somebody could go, hey, I think cryptos in general will go up. I'm going to get into an index. Having ICOs, like the really altcoins, the exotics, that could be an interesting offering for a broker as well, you know, because I haven't seen that yet. You know, like you go to like Polonix Exchange, there's a whole bunch of, you know, coins that are not available as a CFD product or even as, you know, as an STP type of a situation. So yeah, and then there's other like this talks about like mining contracts and stuff like that. So all kinds of different products that are unique. You're going to need to compete and differentiate yourself.
I think in addition to kind of the points that were mentioned, there's a little bit more nuance in it, in that I think it really comes down to the sophistication of the broker itself and their ability to look at a coin and kind of establish what Simon was talking about. Like, do they actually offer something of value? So that's kind of the first question. And but you know, if you don't know a lot about the space, it's gonna, and you're an FX broker and you're just saying, how do I decide what coins to offer? You should probably just go with the, you know, top 10 coins or so. If you don't have the sophistication or the and I don't mean to quantify it in terms of intelligence, that's a little offensive, sorry, but you know, if you don't have in-house experts on cryptocurrencies who can kind of dive into the white papers and all the technicals of the ICO itself, I think that's kind of the first step. And then obviously, you know, the regulatory concern is kind of the second and equally as important thing. So where you're located really depends on, you know, what you might be able to do. I mean, some of these exchanges and stuff, they're thinking about offshore jurisdictions, et cetera, to avoid regulation, but then they have the security of funds issue that we kind of touched on a little bit earlier. So I think, you know, as a kind of rule of thumb, though, I think if you don't know a lot about the crypto space, then, you know, diving into which ICO to offer on your platform puts you at a lot of risk for a lot of various reasons if you really don't know what you're doing. So similar to my other thoughts, you know, you really do your due diligence and learn the industry before you start trying to come up with, you know, the altcoins and all of the different things that you might offer out to your clients.
Okay, so like we said, this is a notion compared to the FX little pool. So obviously, in 45 minutes, we couldn't cover everything. You know, from everything is going on right now with the Bitcoin Cash and the forks and everything that's going on. But hopefully, if you're interested, you're gonna keep following this, and you know, our expert's gonna be here right now if you wanna ask them, you know, at their booths. I want to say thank you for everybody. Thank you.
Thanks, Avi.
Thank you.